Here's a really good reason why you're probably struggling with futures trading, why you're struggling with trading altogether. And it's because you're trying to learn too many strategies all at once. You're trying to factor in so many different uh, setups and terminology that when the market is live and price action is moving and it's really time to play the game, you're just completely crumbling under pressure. And I've been working with traders now for, oh gosh, this is probably, we're going into 2025. I've been working with traders since 2019. So, going on the better half of 5.5 years. I've been a full time trader for 10 years and been trading for 12 years and spoken to hundreds of traders over the past 5.5, 6 years. Um, the thing is this is when you're just focusing on one type of mechanical setup or mechanical strategy, you're going to have a little bit of success, but a lot of times you're not going to be able to identify when you should let some setups go. And you're not going to be able to identify when you should size into and size up on some setups and when you should cut some position sizing down, meaning lessen up the contracts, okay? There's times where you need to open up your stop loss. If you're running a 10-point stop loss, you're running a 12-point stop loss on the NASDAQ, good luck, right? You better be trading a super small time frame like the 30-second or the 1 minute or even the 2 minute. And even the 2 minute is a little bit difficult, but you better be very, very precise, and you better make sure that strategy has a very, very high win rate, or you're going to get stopped out and it's going to hurt. Um, so how do we do this, right? How do we get around this? What you need to do when you come up to the markets each and every single day, it's like you're coming up to bat, right? You're up at the plate. You need to look for your setups based on your strategy, but you also need to start reading price action. Okay? Now, again, new terminology for some of you, right? What is reading price action? Guys, it's just allowing your eyes to do the heavy lifting for you, right? Just allow your eyes to tell your brain, hey, this makes sense. So let me give you a little bit of a scenario. This morning, today, we had a big sell off. Okay. So I marked out this zone, right? I marked out this low of day. I watched us bounce. I watched us consolidate for a better half of 2.5 hours. And I started to notice a few things as these candlesticks started to print. Now, I took a long setup here and I sold here, right? Why is that? Well, because I've seen this time and time again. Extension move down, no more follow through finally. We finally get a green candle starting to take out a previous candle that has no follow through, and we can get it for a little bit of a scalp. But once we started to consolidate, we pulled back once, we bounced, we're in a range, we pulled back twice, kind of held, back again, kind of held. Now the light bulb is starting to flicker because I can actually start to mark out a demand zone here. And if I look to the left, well, if I look at this candle here at 11 a.m., and I see where that bottom wick is, and then I kind of look a little bit more to the right and I see where this candle stopped, where this candle started to shoot through, a nice little like zone here. And then I start looking at the price action, and we tagged it once, and we tagged it twice, and we tagged it 3 times, and actually lost that level here. We never really lost the zone. So what tends to happen a lot of times is traders will take this setup because we just broke this little couple wicks of consolidation, but realistically you have to approach the market in zones, right? If you're not at least giving yourself 10 to 15 points of zone to kind of work with, you're kind of really doing yourself a disservice, because while everyone here is waiting for the continuation down, which would in fact be true if we closed below the zone, bounced, and failed to get back above and then confirm the new low, right? But in this case, all this was a sweep of this support that we were building for a flip back up to the upside. So this only happens with trading day in and day out, reading the price action, seeing what happens. I encourage all of you guys, if you want to stop losing money and you want to start actually learning this business to where you can operate on your own without someone holding your hand. Again, it's easy for someone to tell you to buy here and sell there, but you're never going to learn anything. You're always going to be 3 steps behind. You're always going to be chasing price action. You're always going to be searching for the next golden goose. You as a trader need to do this on your own. You as a trader need to be able to identify and use common sense. Okay? It's not about showing up to the markets and just saying, hey, market's pulling back, let me short. Hey, market's bouncing, let me go long. No. What are you basing that off of? And if you look at this chart, these are all my markups from today. As the price action started to print, and the day started to play out, I start to mark out all of these zones. Because some of these zones, for example, this is a 20 play. Okay, this is a 20 play right here. Now that's in my setup. It's in my tool belt. It's in my arsenal. But I also have confidence to get into this because I just watched a sweep and then immediately bounce off this demand zone. Now, I would not have confidence taking this setup in the middle of a range if I didn't have this zone here. If I didn't even pay attention to we bounced off it once and twice and 3 times and 4 times. Geez, how many times are we going to bounce off the same zone before we lose it or we finally break to the upside? And again, this dotted line here, this is our initial balance low. If you don't know what the initial balance low is and you're not marking it out on your chart, you have no idea that we have potential to stop here in this range. You have no idea. So if you want to start getting ahead of the game and you want to start getting ahead of the curve and a lot of the other traders who are struggling day in and day out, month after month after month after month, you need to look at yourself in the mirror and you need to tell yourself you need to actually put in the work. You need to put in the screen time. You need to put in the chart work. You need to start learning how to mark up your own charts. And I do not mean going over to TradingView and clicking some of these fancy, flashy indicators that's going to drop a bunch of drawing and a bunch of crap all over your screen that you have no idea how to read it. The name sounds cute. It sounds nice. But if you don't know how to use it, you're never going to make it work for you. The best way and fastest way that I have found things to work for me in trading is by to do them myself. That's to take trades myself, to figure out if it wins or it loses. To take the same trade setup 50, 100 times to see what is the expected probability on this. What is a good stop loss? What is a good take profit? What works more than it doesn't? Start using common sense, guys. We are all human. We're blessed enough to have a brain in our heads. We've got to start using it. We've got to stop relying on everything else out there, on all the new fancy things, on everyone else to help us learn how to trade. We've got to roll the sleeves up. We've got to get some basic concepts and some basic risk management skills, and we've got to start putting in the work. If you are not spending 1 to 2 hours a day each and every single day until you get this down, charting and backtesting, you've lost. Your competition has been doing this for years. Your competition has a lot more money than you. You are going against people that are going to destroy you in the market. The market is an open marketplace. It's you versus me. However, when I say that, it's not like every individual retail trader is in competition with another retail trader. Meaning, if you make money, doesn't mean that I'm going to lose money per se. There's millions of people in this market, but someone's going to lose. And I'll tell you who's going to lose is the person who's not putting in the time, the effort to understand discipline, to understand risk management, to build themselves a trade plan, to actually stick to their rules. Because so many traders understand that they should probably stop trading when they lose 2 or 3 trades in a row and they lose $500 or $600 or whatever they have as their personal daily drawdown limit. But you don't. No one's going to be there to make you force yourself to stop trading. Nobody can help you take more winning trades. Nobody can tell you to stop going on tilt. It's going to take you, just like it's going to take you to backtest, and it's going to take you to start learning how to mark up your charts so you stop losing. And you have to mark them up in a way that makes sense to you. You have to mark them up in a way where you can identify these certain areas and you can have confidence taking the trades, because if you lack confidence, you lack the position size to get into a trade to make good money. You lack the discipline to get out of the trade because you know it's technically broken. So instead of getting out for a loss, you hold it for a huge loss, and then you end up blowing up your accounts. Guys, this video is long-winded. Make sure to like, comment, and subscribe. If you want to trade with me, that link is down in the description box below. Join Evolution Traders. To everyone else, have a blessed week of trading. Stay calm and stay patient. I'll see the rest of you guys on YouTube in the next video.